What's going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit notification bell so you don't miss future videos. Now, the market has taken a hit. And yes, I'm up now, but I've been down a little bit. So at one point, I was at 225,000, and now I'm down to 189,000. So I took a significant hit. I'm going to bring up two things. Now, one, I haven't been doing videos for a while. I've been very busy with work. One, you shouldn't be buying things because I buy things. Okay? Two, I have a very well diversified dividend portfolio. Now, I really love the weekly pay ETFs. And I'm going to be honest with you, reliability isn't always there when you do leverage. I took a significant hit with the Robinhood weekly pay ETF. It'll probably eventually get back up there. Robinhood's a really good platform. I mean, Bitcoin's taken a big hit. It probably correlated with Robinhood. They'll be back up there. I'm not too worried. And plus, I have Robinhood, the HOOW, reinvesting into HOOW. So I took a hit. I'm just going to be honest with you. I took a hit, but it's important to be balanced. I have dividend growth stocks. I have really good ones. I have Procter & Gamble. I have VIG ETF, the Vanguard Dividend Appreciation. I have SCHD. Okay. I have QQQ, okay, which is the NEOS. I want to make sure I got the symbol right. I have those as well. So yes, BTCI, I took a huge hit with, and BITO, I took a huge hit with. That's the importance of diversification. If I went all in on these weekly pay ETFs, I'd be screwed. And you already saw a reverse split with ulty ETF. Now, the good thing with ulty, I think the one thing they have going for them is, yes, it is portfolio options. It's ETFs. I'm sorry, it is actual holdings inside the ETF. It used to be there. I mean, it was very, very crazy with their portfolio, but they made changes. So I'm not going to give them a complete jab, but I'm not going to go all in them. Okay, I got in, I got out at the right time, but I'm just going to be honest with you. These weekly pay, there's 3 weekly pay ETFs I feel good about in times like these, and I'm going to go over them. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out these ETFs that I feel confident about long-term wise, even if there is a dip right now. So the Roundhill Magnificent 7 covered call ETF, and I forgot to mention this as well. I'm going to be posting old grade school videos. So it's going to be you're going to see some random videos of my 8th grade. My niche is dividend investing, but I'm doing this for my buddies. So I'm going to post these videos for my buddies and former teammates in 8th grade videos. So yes, my niche is dividend investing. I'm just going to post these videos for everyone. That way, they can watch games of our throwback in 1999. So I just want to bring that up. So the Roundhill Magnificent 7 covered call ETF, it implements a covered call strategy on the Magnificent 7 stocks. And I'm telling you, try to talk with Invisalign, it's even harder. The fund offers exposure to the Magnificent 7 subject to a cap while providing the potential for current income. It's an actively managed ETF. Weekly distributions, precise exposure, actively managed. So the fund details, you do have a high expense ratio of 1.28%. But what is my goal with MAGY? My goal with MAGY is to buy dividend growth stocks. So you see the Roundhill Magnificent 7 ETF. MAGS, M-A-G-S, that's 100.07% of the weight, okay? And then it does a little call thing. But it follows this. In the Magnificent 7, the MAG 7, And I'm telling you, it is so hard to try to say Magnificent Seven with Invisalign in my mouth. It's hard. But it's doing very well. And the other thing is the distribution. So the price is not bad. We went over that, but the distribution is in the 30s consistently, 37, 38, 37, 38, 36. So there is some consistency with that. But there's another ETF that has been down a weekly pair that time to capitalize on, and it's a weekly pair, so that's even better. Let's check that one out. I'm kind of pumped up for this one to be down a little bit. The Roundhill, okay, Roundhill has some good ones. I'm kind of pumped up to get this one and buy more. The Nicholas Crypto Income ETF, BLOX is the symbol. It's sitting at 1704 right now. Now, since inception, it's down 11.66%. It's time to capitalize on it, and I'm going to go over it. So it's an actively managed exchange-traded fund that provides exposure to blockchain technology to enhance income and provide portfolio diversification. Now, again, it doesn't blend directly into Bitcoin or any digital assets, so just be aware of that. So the fund objective, Bitcoin and Ether, crypto industry companies, and weekly income. An actively managed ETF that seeks to give investors the opportunity to have exposure to both Bitcoin and Ether through direct or indirect ownership of U.S. listed exchange-traded funds and or exchange-traded products, ETPs. The fund will invest in the crypto industry companies engaged in crypto asset mining, blockchain technology, and crypto trading platforms, payment processing, and I like to say this, technology providers within the crypto industry and companies that invest directly in crypto. So right here we have an expense ratio of 1.03%, and we have a good distribution rate of 36%. Now the distribution's low, but I'm still happy with that. 16 cents, 18, 17, 18. So I have some shares in that. And I'm happy about that with the distribution, and I'm going to continue to reinvest. And when I earn passive income, I'm going to continue to reinvest in it. Yes, I'm down, but I'm telling you, you have to have a diversified portfolio. And with my IRA and my, well, actually IRAs, you know, I have SCHG in, and I have the S&P 500 in, and I have growth stocks. This is my dividend portfolio. This is an income portfolio, a high yield income portfolio integrated with a dividend growth type portfolio. So this is my own ETF that I kind of made. Now, let's jump to the final one. This one I'm kind of excited to own, and I wish that Rex Shares would have more ETFs on M1 Finance, and I hope they add some soon. But NVII, the Rex NVDA Growth and Income ETF, is one that I really like and I'm excited about. And guess what? It's in the positive, 28.74 right now. So it's a good deal. So my income's going to be, it appears to be buying shares of NVII. And I'll even show you at the end how much income I'm earning. So this is what excites me about this one. So let's jump to that. Distribution rate is 57.94%. The fund strategy involves daily leverage exposure between 1.05x and 1.50x to NVDA. So it has Nvidia. Now you have to be very, very careful with leverage. Okay? Because you look what happened to MSTY and MST. MST is getting crushed because MicroStrategy is getting crushed because Bitcoin's getting crushed. I didn't see this happening. People appear to be panic selling. I think that's what's going on. I don't know. I'm not the right person to ask. I don't give financial advice. I don't know, but it's just crazy that this massive sell-off is going on. I don't know what's going on. You're going to have to explain in the comment section what you think is going on. So NVII, one half up cap upside potential, one half weekly income via cover call strategy, balance and income. Okay. And again, 1.05% and 150% of the daily percentage of Nvidia. So be aware of that. When Nvidia gets hit, you're getting hurt. So look at the weekly income: 22 cents, 21, 55, 20, 21, 45, 26, 23, 30, 33. That's not bad. That's not bad at all. Okay, so you see right here with what's going on inside of it. Again, this is why I tell people, don't buy things because I buy things. This is a small percentage that I'm focusing on my dividend portfolio. Less than 20%. So the income, and I don't find this as reliability. How would you feel? You know, oh, 1 week you make 50 cents, the next week you make 13 cents. And then the next week you make 30 cents. The reliability is not there. So this is kind of like play money, okay, to buy dividend growers. Dividend growth always wins. I'm going to tell you that. Good companies like Target, McDonald's, Starbucks, Pepsi. I mean, those guys are the real winners. Prologis, the REIT, that's what I care about long-term wise, because I'm going to get raises and things are going to do well. So I'm going to jump to my dividend portfolio real quick. Okay, so last month I made $8,487.35. The weekly payers are fantastic. The weekly payers this month are not good. I mean, it's not fantastic. So long-term wise, okay, this income is going to be buying dividend growth stocks. The dividend growers are the winners. And I mean, I'll probably do a long presentation with you guys on what's going on and why dividend growth is going to win. So most of these are kind of dividend growers. This is estimated. Pay 1,000. I mean, I could pay for my apartment, but you know, monthly. But come on, I want raises. You know, I want dividend hikes. Why invest in dividend stocks? So this may be down. This may be 6,000. So this is why I'm telling you guys, don't go all in these weekly payers. I can take a hit. Some of you can't. Some of you are probably married, have kids. I'm 40, single, no kids, student loan debt free. I mean, I did travel nursing for 3 years to build a powerful dividend portfolio. So I'm just being very clear with you guys what I'm doing, showing you my investing journey. And I'm telling you, don't do this because I do it. Have your own strategy. Go to a financial advisor for financial advice. Go to a tax advisor for tax advice. My videos are for entertainment purposes only. Okay? So you have to do your due diligence when it comes to investing. You can lose money when you invest in the stock market. Yes, I own all three. Things can change. I have a disclaimer in my description of my video. So I'm doing this. I'm showing you my passive income journey. I'm showing you what's going on, the good and the bad. I would hate for the bad to happen to you. So this is why I'm just showing you, and I'm being very transparent with my investing strategy and see if it works. Maybe it does, maybe it doesn't. But I can take a hit. I can take a 80K hit with my dividend portfolio and I'd still be okay. That's why I'm just trying to be very transparent with you guys. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. Please go to a financial advisor for financial advice. Please go to a tax advisor for tax advice. Entertainment purposes only is this video. Thank you. Take care.